What's up, guys? In today's video, we're going to be talking about what's going on with the market and whether or not we're about to see a huge drop. So we can see if we look at the SPY or the S&P 500, it really hasn't done anything all week. We are at the same spot where we were at last Friday, even though we had companies report record earnings this week like Microsoft, Apple, and Amazon, and a lot of other ones. They reported really great earnings, but a lot of these stocks are just falling. I was doing a lot of research and digging through a lot of different order flow, and I saw hundreds of $1 million worth of SPY call options being sold. So in this video, we're going to talk about what's going on with the market, what I'm seeing from institutional investors right now, and basically what to watch out for, and just like we're just going to go over what's going on with the overall market. So the first thing is I want to point out this SPY call option right here. It is the SPY 404 strike call options. They expire on August 20th of 2021. We can see that there was around $200 million put into these call options back in March, on March 24th and March 25th. They basically bought these call options at the very bottom. So we're going to go back to this SPY on the 24th and 25th of this past drop. They literally caught it at the exact bottom for the most part, at least for this options history. But long story short, they loaded up on call options. Some institution loaded up on call options at like the end of March, right? And they've been slowly selling out of these call options. And we can see that they only have around $40,000 or 40,000 call options left, right? They sold 20,000 more today. So they only have 20,000 left. So long story short, they had around 200 call options initially, and they've been slowly selling out, and they're almost 100% sold out of these calls. And like I said, they caught these calls at basically the exact bottom of this options chart history. So this is, a pretty, I don't want to say bearish, but it definitely scares me a little bit to see that, some really smart money is almost selling completely out of their long SPY position. And then if we look at the SPY, like I said earlier, we saw so much great movement or great earnings this week out of some huge companies. And when I look at the SPY over the past week, like it tries to run up, but it just gets rejected every time. Like we could see on the 23rd, this was last Friday, it was trying to run up, it got rejected hard into close. On Monday, tries to run up, gets rejected. On Tuesday? On Wednesday, it tried to run up multiple times, but it gets rejected. Tries to run up again, gets rejected. It shows that there's a lot of selling pressure. And then even yesterday, this was probably the craziest day. It ran up so much in pre-market and got rejected so hard, and it fell a lot. Today, it's falling more. So to me, it just shows a lot of selling pressure, and I hate to see that. And while we're seeing all of this selling pressure, we are seeing implied volatility rise, which shows that options premiums are getting bid up. So, more and more investors are buying up puts especially. And if we look at the VXX or the VIX index, that is starting to creep up too. So this is not a good sign. Basically, when this goes up, it means the market is going to get a lot more volatile. And a lot of times when this goes up, the market likes to tank. And if we look back throughout history, if we go like on a 2-year chart, we can see that in March of 2020, this thing straight up exploded when the market crashed. Whenever there's big downturns in the market, the VIX likes to creep up, and the VIX is up around 5% today. So it's not a good sign. And then another thing is a Discord member actually pointed this out to me today. If we go over to the SPY options chain and we go to the January 21st of 2022 expiration, right? Right now the SPY is at $417. You could say it's at, for simple purposes, let's say around $415. Let's say we go $100 out of the money to the call side and then $100 out of the money to the put side, right? So we're going to look at the 515 calls and then the 315 puts. So let's scroll down. The 515 calls are around $70 each right now, okay? The 315 puts are right around, let's see, $600. All right. So if you want to bet on like a $100 move right now to the upside, it only costs you $75. But if you want to bet on a $100 move to the downside, it'll cost you $600. This is a crazy, crazy discrepancy. And normally, we do see put options a little bit more expensive than call options, and that's normal. Put options act as insurance for a lot of these institutions, and they buy a lot of these put options to protect their portfolio. But to see this big of a difference, around $75 compared to $600, in my opinion, that's a big red flag. And in my opinion, it's showing that these giant institutions are really buying up these put options. Like I said, that's just my opinion. Do your own research. But to see that big of a discrepancy on such a large, on such a huge security like the SPY, in my opinion, that's a huge red flag. And then plus we have the implied volatility creeping up. If we look at the SPY on a technical level, like I said, every time it tries to run up, it's just been getting rejected. Right now we have the SPY right around 417. Some next major support levels are right around 416. And if we break below 416, the next major support is right around like 411. So be on the lookout for these levels. Just with the reasons I just said, I'm not feeling too good with the SPY. I also found some other notable options, and we can see if we look at the QQQ, which is the NASDAQ, we can see it's down around 0.6% today. It's also struggling a lot this week. I mean, technically it did break all-time highs for like a second, but it came right back down. We also have implied volatility rising. And then if we look at the QQQ 320 strike puts for July 16th of 2021, we see around $17.5 million being put into these today. So it's not a good sign. They are definitely opening this position because the volume is greater than the open interest. So it's not a good sign. And then on top of that, this one is also pretty alarming. So we are looking at the S&P 500 index, not the SPY, the S&P 500 index, ticker symbol SPX on Thinkorswim, and index have options too. And they're a little bit different, but they're pretty much the same. There's a couple small differences, but they work basically the same. But long story short, I saw someone put around $15 million into the SPX $4,110 put options. They expire on July 16th of 2021. They are also opening this position. Each contract costs around like 10 grand. So it's definitely high quality options. They're close to the money and they have some time. We have IV rising. So, for all the reasons I listed in today's video, I'm just not feeling too hot about the market right now. I wouldn't be surprised if we see a pullback. Always do your own research, but the main reasons that scare me are we saw some giant companies this week report amazing earnings. Apple, Amazon, Microsoft, and a lot of other companies absolutely crushed earnings, and a lot of these stocks are falling. And I understand that earnings can be crazy, but even just looking at the movement on the SPY, like every single time it tried to break out, there was so much selling pressure. We could just see a heat map of the S&P 500 right now. We're seeing a lot of stocks in the red. Tesla did pretty well today, but it's not really correlated to the market at all. But we're just seeing a lot of selling pressure. And then another thing is, if whatever institution or giant trader was behind this call options trade down here when they bought the market basically at the bottom, and they've been slowly selling their position off, and now they're almost completely out of their position, I'm sure they've definitely done their research and they know when the market might be likely to pull back. So this is another scary thing. And, even seeing the huge discrepancy across the SPY options chain for the January 21st of 2022, I think that's crazy to see. If you want to go $100 out of the money to the upside, it'll cost you around $75. But if you want to go $100 out of the money to the downside, it'll cost you around $600. In my opinion, that's crazy to see this large of a discrepancy. So let me know what you guys think in the comments down below. Personally, I think the market's a little bit overextended, and we are seeing a couple red flags, with the market, like I outlined in this video. Well, let me know what you guys see. Let me know if you think the market's going to continue to break new highs next week, or maybe do you think we're going to pull back for, a little bit. So let me know in the comments down below. Thank you guys so much for watching this video. And if you are new here, don't forget to subscribe. I post brand new videos every single day. But other than that, thanks for watching.